Hello and welcome to your Asset Intelligence Market Update. Well, they say when it rains, it pours, and in April, a month famous for its showers, that certainly held to be the case. The global stock index returned minus 4.1% and the global bond market minus 0.8%. So why did this happen? Well, the horizon has started to look somewhat overcast of late. Investors have been troubled by a drip, drip, drip of various grey clouds appearing. Central banks like America's Federal Reserve reacting with increasing urgency to rein in inflation by raising rates. Ongoing tail risks resulting from the devastating war in Ukraine. Falling forecasts for economic growth or even contraction, as the Bank of England recently predicted for the UK. China's new COVID lockdowns and the knock-on effects for global supply chains. Some investors have caught sight of this slew of tough headlines and have chosen to shelter by selling their assets. Astonishingly, surveys show that investor sentiment is at its lowest levels not just in months or years, but in decades, and that explains the sharpness of the drawdowns we've seen lately. Now, it's true that the market faces challenges at the moment, there's no getting away from that. Still, aversion at these levels is arguably curious, given that corporate performance has remained robust, even through the turbulence of recent months. Indeed, if we look at the world's biggest and most influential market, the US, companies' profit reports for the first quarter have been impressively strong. At the time of recording, the latest data show that on average, companies have reported earnings more than 9% above the same period last year. What's more, 4 in every 5 companies have reported results which have beat analyst consensus expectations. So by and large, companies are coping with the pressure of rising material and labour costs remarkably well so far. It's also worth noting that, of course, there can be no guarantees that history will repeat on this occasion. The record shows that buying shares during the depths of despair has often been a winning strategy. Indeed, in the industry, investor sentiment is often considered to be a contrarian indicator. And while we're pleased to see that so far this year our asset intelligence defensive and growth funds have each protected more capital than their respective average competitors, of course we understand that you can't spend relative returns. The market this year has been an uncomfortable place to be. Yet more than a century of data show that shares are highly likely to outperform cash and inflation over the long term. And that has held even though there has always been something to worry about over all of that time. The important thing to remember is that after every storm, eventually comes the calm. Well, that's all from me this month. Thanks for watching and remember to like, comment, share and subscribe. And let's hope that after April's showers, actual and metaphorical, we soon see some May flowers.